Hi guys, this is Martin from markets.live. We welcome you to another trading update for this day. We'll go straight to the trades that are already outstanding on the Algo 2. As you know, we normally issue these updates for the Algo 2 only. Those who are trading on Algo 1, we're not really issuing these analysis for Algo 1. Algo 1 is a counter trend system, and we do not normally issue trend updates for those. Algo 2 is basically the long-term trend trader. They trade with the trend, and it's extremely profitable with 84% win rate, and it has a history of over 10 years of trading, which gives it tremendous amount of flexibility and stability even in the current environment. Now, just looking at the euro dollar, which is a trade that is outstanding on our system. As you know, we have been short this trade, and it's a lovely trade for a number of reasons, because the longer you hold, it still pays you money and you are in direction with a longer term. What we have to manage here is just a short-term bounces, and on last week on Thursday and Friday there was a bounce which is extremely unexpected when Donald Trump issued those tweets about the dollar strength. But as it so happened, the bounce still fitted out at 1.1750. Now, this is the blue line, which is a 50 DMI, which is a line that you normally follow for long-term trends. It is like a trend line, but just not as straight, but with a curve, and it's basically the price average of the 50 DMI. Now, as you see, the price is going up and down above it, but this line is still trending down. That's very important when you're trading it down. The direction of this slope will indicate whether the pair is expected to move down or lower. Now, this has been there for a long period of time. Since June 1st week, we are in this trading range, but this range is now starting to get extremely contracted. As you can see, there's a little bit of a flag formation here. This is upper trend line, and this is the lower trend line. Now, that is a flag formation. Now, any trading school will teach you that a flag formation in a downtrend or in an uptrend will normally resolve in the direction of the trend. So we expect this to fully break down in the direction of this trend here. Having said that, now this is a daily chart. As you can see, this is fairly simple. This is what Algo 2 normally uses to trade, and there's a lot of other complexities, not a lot of other variables that go into the algorithm, which is basically the US 10 year, the US 2 year, then the spread between the 2 and the 10 year. It also takes another, it also reads a little bit of tweets and news flows and etc, but it's a very advanced algorithm one that I don't think I can explain in a short video like this. So what we do is just look at the charts and give you a sense of what the algorithm is seeing. Now, this is a 4-hourly chart on the euro dollar. This is the Draghi, the last time ECB issued its press conference, and there we saw Draghi pulled it down to 1.15, and since then we have been in this trading range. What's important to note here is that price hasn't broken above. That's very important. It's not important it hasn't broken down, but it's important to note it hasn't broken above. And that tells us that this trend here, this trend that started here, is still valid. If it had broken above 1.185, this trend would have been fully neutralized. But the fact that we haven't even reached to 1.1, it shows how negative and bearish the market is. So we fully expect the market to break this down to 1.16 and 1.14 is where we really look. The model will start lightening up at about 1.14. But will that be the final target of the euro dollar? We don't think so. We think this is going down to 1.1 or 1 point, even below that. Generally, the way to measure targets is the source of this move, which is 1.232, first target, which is at 1.15, then the bounce, and then when it breaks again, you will see that the distance between this and this is what the distance will be from here to here. Normally, such big breakdowns have 2 legs of breakdowns before there's some kind of bottom formation. So we fully expect a big leg down, which is what the model is trying to take advantage of in the coming weeks. It's taken a bit of time, so just be patient, but the good thing is the trade continues to pay us swap money even as we hold on. That's a beautiful thing about this trade. We don't need to worry too much about any negative carry cost. So that's the euro dollar on the 4-hourly chart and the daily chart. Let's look at the hourly chart. This is where the algo was taken aback a little bit. This is Donald Trump's tweet. We are supposed to break down last week, and we had broken down below this lows here, below this outer Bollinger line, and we're just starting to break down, which is when this 2 huge moves from Donald Trump, the tweets, and we told you that tweets meant nothing. Donald Trump was questioning the Fed's independence and the Fed should not hike, and it's not in his hands. The Fed is now even more keen to go ahead and raise rates because they will be very keen to show that they're independent. So if they were thinking of going slow on rates, I think Donald Trump's tweets has almost for sure pushed the Fed in the direction of rate hikes. And the bond markets is actually suggesting that there could be 75 bips of hikes in the next remaining 6 months, whereas the spot market is not even pricing in two hikes yet. So that's the difference between what the Fed is going to do and what the Fed is expected to do and what the spot forex market is actually pricing it in. So the dollar, just looking at the dollar direction here, as you can see, this is the dollar's hourly chart. This is again, we are just seeing upside down of the euro dollar, but this is where after breaking out about 95.5, he issued this tweets and it pushed it down to 94. That's a big move actually, 94. But then we've now there's a gap on the opening on Monday, and then we've covered that gap, and that just sets direction higher. There's some resistance coming in here at 94.9. But yesterday there was a very important tweet, not a tweet but basically a leak from one of the reporters who said that Donald Trump is expecting 4.8 or 4.9% GDP growth. That's more than 0.6% more than what the market is expecting. As you know, Friday is the advanced GDP release for the United States of America. Market is expecting 4.2%. However, Trump was overheard here and advises that he expects 4.8, and if that be the case, then well, we should see the breakout of this 95.5. Is this rumor true? I don't know. But if you look at the bond markets, yes, something very peculiar happened yesterday. This is a 10-year. You see, this 10-year was yesterday 2.8%, and while we were looking at the screen, this just blasted off into the stratosphere. It hit 2.96% in the matter of just a few hours. We are left wondering what happened here. This was unexplainable, and that is when we got to know that there was this leak about the GDP numbers on Friday, and bond market is taking that rumor very seriously. Good numbers means the bond markets will sell off, yield will rise, and generally speaking, theoretically, when yields rise, the spot forex of that country should rise. The dollar is on its way higher. Does this relation always hold true? Well, let's take a look at the daily chart in April. This is a US 10-year. This is April 19th or April 20th. This is when the US 10-year starts to move higher from 2.970 to 2.3 point something by the end of November, on the end of June, end of May. Now let's look at the dollar index. When did dollar start to move? You see, dollar started to move higher somewhere middle of April, like 16th April. It's just the very day or the very next day that the yield broke out that the dollar started to strengthen, and dollar moved, and it kept on moving higher till the end of May, and then in June it started to consolidate, which is when the yield also started to consolidate a little bit. Now again, we've seen the yield break out yesterday. Look at this, taking over these resistances, and it's starting to move higher. The big level, and there's no resistance now, it just should go higher. It could just move really fast, and that could be the precursor for the dollar to move to 95.5 as well. And this time the dollar index reaches 95.5, consider that to be a breakout, because there will be no resistance there anymore, no sell orders. It will just cleanly go higher. It could coincide with Friday when the GDP numbers are released, or it could coincide with ECB when they issue their press conference. Either way, this is an important week for euro dollar, so we expect the euro dollar to fall down as expected to 1.14 minimum. That's what the model is trying to is where it is. Model is looking to lighten up. This is a weekly chart of the euro dollar. Again, you can see how negative, how bearish this market looks like. What looks like a mildly up flip-flopping market in the hourly chart. Look at the weekly chart, which is more important, and as you can see, there is hardly any move to any move to go higher, and this is a big move down, and such L-shaped moves will generally result in a move down. There's hardly any support, any effort to move higher. It's not even touched 1.18 after falling from 1.22. So we see this going down. This is the big support comes in at about 1.14. That's where you want to look to lighten up, and that's exactly where the model is trying to get out as well. but I cannot rule out that we will slice through and fall down to 1.1. That's very, very likely. And the reason what it could take the markets there is that Donald Trump has this. There's a big there's a big tweet coming, and there's a big policy shift coming where Donald Trump is trying to impose 20%, 10% tariffs on German auto makers, and that will be very negative for the euro dollar. That's why the euro is not ready to go higher, even though there are chances that the ECB might raise their rates much before they've indicated in the last deal. But markets don't care about ECB right now, because if Donald Trump does impose those expected auto tariffs, the euro will really sink here. We're looking, this is just a minor support, it's just going to crash through, and we should be very vigilant here, because in 1 week, if it does crash through this, then it could fall very, very sharply to this gap here. There's a gap here, uncovered gap between 1.08 and 1.09. That gap could be filled very, very quickly. This is a euro dollar on the weekly chart. A very important pair when you're looking at the euro dollar is a euro JPY. Generally, the euro JPY shows how weak or strong the euro is. Now let's look at the euro with JPY. Now this is a weekly chart. It hit, now the euro JPY hit about 132 and it then turned down because there was a big resistance here, which is a 50 weekly moving average. And while we're not trading this, I just want to show this, show the big opportunity here. You see, it hit this and then it turned down. It was fully expected. Some of you have been emailing us about euro JPY, and we've been indicating go short at 132 because that's a big resistance, and some of you have taken that, and just sit tight on this because it's going to fall down to 128 below. Before euro USD hits 1.1, this will hit at least 126, 125. That's so be short, have a stop above 132 or above 131, and go for the at least the first target will be 128. So we have a sizable amount of 200 pips left here. Take an easy because this is going to move before the euro dollar, at least that's general practice. So euro JPY shows weakness in euro, and we're going to see that translated into euro dollar today, tomorrow, this week. It could be a big week for the euro dollar, but if not, we'll just be very happy to hold on till the time we get the target there, because we're seeing no positive euro driver at all. What about the gold? Now this is, normally we don't look at the gold, but it's important to know what gold does before dollar does. So if this is gold breaking down from 1350, this coincided with the move in the dollar index in middle April. Before dollar broke out, gold broke down, and gold is still breaking down. Even though dollar has been showing signs of stability, gold has shown no signs, and it's just broken through all these supports, and it's now headed lower to 1120, which is the next level of support. The fact that gold, now the algo does look at gold sometimes because it's a precursor to the dollar index. So when the gold traders are exiting gold, they are expecting dollar strength in great ways in the next few weeks, which is why they're just very quickly getting out of this, because they expect dollar to move higher and higher to 98, 99, 100 possibly. So gold is telling us a big wave of dollar strength is coming. Gold is telling us euro dollar is going to crack down to 1.1. Gold is telling us that traders are nervous right now to hold any kind of currencies other than the dollar. So euro dollar, gold, dollar index, all of them are very, and the 10-year and the 2-year yield, they're all telling us one thing, that we are going to see some serious amount of dollar strength. We just need to be prepared, be patient for it. And if you're trading manual, don't trade against the dollar. I suggest that you can afford to take a little bit bigger bets on these kinds of trends, because they're so convincing, so confirming in every direction, that you should be able to make a serious amount of money there. So that's about it. We'll have more if I think all the trades are working out very well. We had to take a few losses in the euro dollar last week and this week because euro dollar was just showing, not because the trend had changed, but just we had to manage the risk and the stops. The model will clear out some trades and then re-enter them once it's convinced it sees convincing breakdown back in its direction. So this is what had happened. It moved to 1.1750. It took a stop, but once it fell down below 1.14, it took the trade again, a big number there, and it's since then been short. So that's how the algo trades. It gets out if the stops are hit, and but if it turns down in its direction, it will again take the trade, and that's doing very well right now. So the first target, we're looking at 1.1630. the model is trading, but I don't think the model is going to wait that it's going to keep trading the euro dollar down to the previous week's lows. smaller targets, but probably higher sizes. So it's all looking good. If you have any concerns, or if you have any model, or if you have any chart based analysis which you want us to see or be made aware of, please don't hesitate, send it to us, we'll take a look at it. Generally they don't form a decision point, but it's good to be just aware, and if something that jumps out at us, we'll be very careful that there. So this is Martin at livemarkets.live. Thank you.